Let's find out how things are shaping up for Elecon Engineering. They came out with their numbers, and while the MHE business has performed well, it has been a weak set of numbers overall. The stock as well, giving it a thumbs down. Kamlesh Shah, the Group CFO, is here with us to analyze the numbers. Thanks so much for taking time out. So just let's talk about what has led to weakness in execution this quarter, because your revenues and margins have slipped quite significantly. Is this a one-off?
It's one of, as we already spelled out at the beginning of the year. Okay, because this is the first quarter is, because of the code of conduct on account of election in India, there will be a slowdown in the work inflow for us that we are going to cop up with by the end of this year. And that's the reason for the first, for this year, we are given our revenue guidance growth of 15%. So, and the result what we are given is quite as per what we have already spelled out. Not we it doesn't have the much impact so far the revenue is concerned compared to what we have projected.
Okay. But last year, you outperformed in your margin guidance by delivering about 24.5% as opposed to your initial guidance of 22%. What about the margin expectation for FY25? Now that you're saying that this was just an election aberration quarter, are you expecting to go past 25% in FY25?
So for the revenue, so margin guidance, what we are given, that margin guidance for us, 23% plus is quite sustainable for us. And we are quite sure we are just going to cross 24% by the end of the year. This being the first quarter, as always, the first quarter is always low compared to the rest of the other quarters of the year. So over the period when the sales will improve, margin will, it is quite logical that the margin will also improve on that.
That you had business loss because of the code of conduct. I would imagine that this largely would be government business, right? Or because only it's the government business which gets delayed.
Government, yeah, definitely government business at one end, but at the same time, private, sector business like the OEM with from whom we are getting the business, we who are dependent upon the government. So, and mainly it is on account of the approval, that is the dispatch clearance which we are expected when we have to, deliver invoice to the customer. That got delayed this time.
So when this business is lost, does it come back, or this is a business loss which is permanent?
No, it is not a business loss. The generally the way in which the order flows both from the private sector as well as the government sector, there is some tendency it is there. But in the government sector and the private sector which are dependent upon the government sector PSUs, the order info generally is slow because of the code of conduct. The new orders are not getting released from the PSU sectors to directly to Elecon or through the OEMs through whom we are doing the business with the PSUs. That got slowed down. The momentum got started. You can say after the election period is over, the code of conduct is over. And if you see my order book, open order book position, as of 30th June 2024, is 947 crore, which is very much high compared to the last year same Q1 of the last year as well as the Q4 of the last year also.
Areas where your order book is split, can you give us a sense of that?
Here the order book position so far as the gear is concerned, it is 545 and the balance is from MHE division, which is there.
The sector-wise breakup, sir. I just wanted to understand that which is coming from which industry, because in the gear business, how much is coming from which sector?
The gear industry, the product mix is very, the sector specific is very clear. It is coming from steel, cement, power, material handling equipment, sectors is also there separate by itself. In the gear division, also the sugar sector, which is coming up very well.
If demand is coming from fresh capex, and how much is coming from replacement demand?
The fresh KPC the product, if I give you about the product mix from the fresh demand and the replacement market, which we call it as a CSD division. So this quarter, the revenue from the CSD division, that is after sales, is 34% of my consolidated revenue.
15% is what you expect your revenue, what your order book growth would be for FY25, and 20 to 25% margin is where the picture could settle for FY25. If I summarize the interview with this taking point, I will be correct.
Yeah, so my margin is sustainable about 23% plus, and considering the flow of the orders and the my revenue projection as well as the the profitability of each project which is there as on today, we are quite confident we will cross 24% EBITDA margin on my consolidated revenue of 2,225.
Appreciate your time and glad you could join us. I'll be taking a break.
Thank you very much.
Right.
If you like this video, then like, share and subscribe to ET Now.